Hey everyone, it's Michael from Stocks Toolbox. In this video we're going to go over the paper trading toolset. Let's get to it. Trading is a psychological and emotional activity, and it can be very stressful. There are two things that you can do to make them less so. Number one, distribute your risk across many small trades. Number two, build confidence through paper trading. Paper trading allows you to simulate taking a position or a portfolio of positions without actually putting money at risk. You should think of paper trading, though, in two different modes. One, a backtesting mode, and two, a trading without money mode. You want to separate the ideas of backtesting and trading without money. Unless you're trying to prove out some specific concept which requires backtesting and a lot of iterations to form your idea, do your best to make your paper trades realistic and based on how much you have to invest and how you'll be able to handle and endure drawdowns. Try to gear your brain into a mindset of the money and, more importantly, the risk associated with the trades you put on will be building up a psychological and emotional account, which is much more important than your actual cash account, as a strong emotional account can help you out of a real drawdown. Most traders miss out on opportunities because they stop trading when they experience a string of losing trades. The only guarantee we can offer is that you will have losing trades. We can guarantee that. Sometimes it'll be a string of losing trades, and sometimes it'll be very painful and frustrating. Recovering from a drawdown requires having confidence in your method. If you're casual in your paper trading, you'll be making withdrawals from your emotional and psychological accounts. Now, talking about emotions may seem touchy-feely, and you may think it has no place in finance. Ideally, emotions would be left out of finance, but reality is few things in life are more emotional than money. To bar emotions from your trading results, you need a well of confidence to draw from, and paper trading is a great way to build it. So let's take a look at how to use paper trading. It's always a good idea to start by viewing sector and index site charts to get a bead on the short-term market projections. And just as a reminder, the data source for the index and sector charts are compiled from historical trade performance in the stocks triggering within each entity, so within the sector or the indice. And it includes trades from the first 5 hold periods, so 1-day hold, 2-day hold, 3-day hold, 4-day hold, 5-day hold. Once you've got some ideas about the index and sector direction, go through your normal workflow for putting together a list of prospects for the next day's trading. And when you find a prospect you want to track, add it as a paper trade. When you're adding paper trades, right-click on Paper Trading in the main menu and choose Open Link in New Tab, or even as a new window. It's nice to confirm you've scheduled the paper trade order to be placed. But if you go to the paper trading page from your main filtering page, you might lose the search criteria that you've put together in the process of doing so. So this is also a good motivation for getting in the habit of creating presets for your search criteria. When you've got a few paper trades added, refresh the browser tab displaying your paper trades page. Each account is funded with $100,000, and anytime you want to remove the trading history of your account, just select the blue reset button. At the top left, you'll see a few statistics highlighting how your trades have performed, and at the top right, you'll see a profit and loss chart. The green area depicts how your paper trades have performed over time, and the orangish tannish plot at the bottom is depicting the drawdowns of your trades. With the current set of trades I've been testing this past week, I've had a drawdown of about 0.5%, 0.5%, and I'm currently up about 1.7%. As you can see, I've got 11 closed trades, 2 have been losers, 9 have been winners. I've got 3 trades scheduled for entry on tomorrow's open, and I have 8 open positions, 3 of which are in a drawdown, and 5 are currently up. The calculations for these paper trades are performed in our daily data crunch, so any trades you have set will be staged in the orders placed table until the next day's data is updated. If you want a reminder of what the trade setup looks like, just click the text in the strategy cell and you'll be taken to the full backtest report, which has the setup illustration at the top of the page and all the stats on the trade performance for the specific strategy and symbol combination, as well as the full trade history. Any trades you have set but have yet to close will appear in the open positions table. In each row you'll see the strategy name, the direction of the trade, and the best performing back-tested hold period. All paper trades will be automatically exited after being held for the listed hold period. We know the great frustration most traders have is in knowing when to exit. Of course, in your live trading, there's no requirement for you to hold a trade for the full duration of the listed hold period, and likewise, there's no reason you can't keep holding a trade past the listed hold period. But in our paper trading toolset, all the trades are exited on the hold period schedule. So if you schedule a trade to be entered tomorrow, October 31st, and it has a 4-day hold period, your trade will be exited in 4 trading days or on November 5th. Let's do a quick review of how we come up with the hold period values. We start with the premise that while price and volume patterns can be very insightful, there's absolutely no value in developing a strategy and universally applying it to all stocks. Stocks are just vastly different one to another. The same pattern may trade best from the long side in one stock, yet trade equally well or even better from the short side in another stock. So we test each strategy on each symbol, entering the signal long and holding for 11 different hold periods, and then entering short and holding for 11 different hold periods. The number appearing in the hold period column of the opportunities table is the best performing direction and hold period. There are 2 large benefits from this approach. Firstly, you isolate performance exclusively on the quality of the entry signal. This gives you a clear idea of the longevity of the signal for a specific strategy and symbol combination. You can plan to check in on the trade when the signal has historically lost steam and exit with confidence, or maybe apply a trailing stop loss order at that point and give the trade a chance to run. Secondly, you finally have an objective exit and you know it at the time of entry. Once you build trust in the system, it's a real lifted burden to have a clear idea of where your setup has traditionally exhausted. You can get out of the cycle of self-flagellation where you're mad at yourself for staying in a position too long or mad at yourself for taking profits too early. You can really beat yourself up over nearly any exit. It's completely unrealistic to expect that you'll buy the low and sell the high, and it's much more productive to be confident that you're making a data-driven decision based on numerous trades. That's what paper trading inside of Stocks Toolbox gives you. Well, I hope you found this video useful. If you did, please subscribe to our channel and share this video with a friend who could use some trading help. And go to stockstoolbox.com to use the application, and check out our blog for more information at blog.stockstoolbox.com. Thanks for watching, and remember to stack edges in your favor.